Hey guys, what's up? So I currently got my Saturday market breakdown here, which is essentially going to be the Sunday market breakdown combined. I've basically been able to just kind of finalize it over now. And yeah, so going straight into it, the DXY, currently looking at this, very neutral with it. Now, I am anticipating longs, but this could really get a little bit more complex here before we go long, or it could just push up higher. On the 1 hour, we can see that there is a bit of a squeeze here. I wouldn't get caught into a short just yet. Even though it does look like it could be possible, I would really be waiting for a solid push back in on the DXY and then something more deliberate to kind of go in with this. However, this currently looks a bit like a larger range, so if this develop into that, this could easily just make its way back up here. Considering we are in a bullish trending market at the moment, it's just very corrective, which is also another sign that if we did do something like that and come into these areas, this could be more probable for a sell. So I am looking at longs, but mutually still looking at potential shorts, but this is looking pretty good for the upside movement. On the higher time frame, we can see that, you know, price is still within this larger correction of market cycle, so we can't really put our hands on this and say that it's directional, because right now price does seem like it's correctively making its way here, which could still take the remainder of the year, and then coming into next year or end of this year coming into Q4, we could probably get a sell into those areas. But really and truly, we have to be patient with these things. So DXY is still very neutral. We are seeing a lot of movement across the board. It's just been very up and down. I think what we can see right now is that even though we're coming into these areas, this is where the liquidity is really sitting, so we want to be patient to wait for this. But then also going into the higher time frame, there can still be room for this to move higher to fill this gap and come into these areas, but there's a lot of room for this to just really develop over time. Even though we did have this, you can see that we had the lack of commitment, and I'll just quickly just demonstrate that. So we had a 1 2 3 into this area, but we correctively moved away, and now we're just pulling back up. So it's likely that we are going to come back and either tap into these areas or push through it and come to these areas. Now we could see momentum come in to get to these areas, or it could be continuously be corrective. It has started corrective. If you do look at this whole area as one big squeeze, this is still squeezing into the upside. So if something like that happened, you know, don't be surprised that we're just in that cycle where we're making our way to these areas, and then eventually, boom, we just come in and we start selling. So that's basically it for the DXY. I'll just stay very sharp with this, because even so, if we did sell from these areas and it did come all the way down here, we'd still be able to make sense of that and say, well, okay, well, price did respond to, you know, this area, but this isn't the area where we'd really be looking to go short. I think right now we just have to be patient with it. So stay sharp. There could be some intraday trades in here, and that's what we'll usually be looking for, is if there's a potential sell from these areas into these areas to potentially go long again. We just have to stay very sharp with it. It's not the easiest areas to trade in because of the subjectivity around the higher time frame and the lower time frame. So I would say stick with the higher time frame and then just trade in continuation with this move to the upside, and then just basically look for clear and deliberate price action to go there. The US 500 as well still looks very bullish, and I wouldn't really be looking for any shorts just yet. I'd be looking for bullish continuation personally. So this could develop into something a little bit more complex and larger, but really and truly you just want to look at the low here, which just happens to be off the retest here, and then essentially, do we get something where it comes in here, comes back in, test this area, and then we go long? That's basically what I'd be looking for the long, and then looking at the related pairs like US 30 for the continuations. If we did happen to sell off and we're down here somewhere selling, then fair enough, we could look for shorts, but I don't think we're just in short territory just yet. We do need to see something really confirming on the weekly and daily, and right now we're seeing extreme bullish momentum, so we need to play with the momentum. JP225, it's still corrective, I'll be honest with you. I did try get a few trades in here, but it doesn't seem like it's the one right now. It's just correctively squeezing. Look, we created a floor 1 2 3, was looking for longs in this area, but because of how price is kind of moving, I don't think that price is really going to be moving just yet. If it did impulse dramatically, well, it is what it is, because right now we're seeing with the yen pairs that they are in their high value territories right now, but we just need to be a little bit more patient with it. So I would be waiting a little bit more patient for that. Going into my top 6 for what I've got this week, I have a little bit less, but I might filter something in on them over the week. But for now, I think I'm quite happy with what I have. So the way I'm seeing this is, if we look at it from a daily perspective, we are in selling momentum and we have pulled back. But if we look at how we've pulled back, we've actually pulled back to 50% off this move. So in terms of a retracement, we've done more than enough at this point, and now we're pulling back down. So when I go into the 4 hour, I'm looking for deliberate continuation price action to go short, and then we can see that we've responded to the retest of this area. We've basically had this accumulation here, we've broken above, caught people out, taken the stops, and now we're pushing back into the downside. So what we're looking for is just something deliberate. If you do get very zoomed in, you can probably see that there is a continuation pattern which is already formulated in here, where you've basically got the squeeze, you've got the floor, and then you've basically got that. But I think that would just be a very, very high risk position, and we want to wait for something a little bit more deliberate such as this, and then you can get positioned. A risk entry would be my preferred entry on Aussie New Zealand, but it does come with risk as always. So we will be waiting patiently for this. If this did sell off and then create deliberate price action down here somewhere, then it'd be a no-brainer. You just have to evaluate it. But the nice thing is we're trading back below this low, and we could basically be looking for lows to basically go short. So there's a lot of potential in here. With the risk entry to this point, I'd be looking at about 3%, where that's pretty nice, and then to the low, you're looking at 10 odd. So all in all, it's looking pretty okay. We do have these sort of areas here that we could easily gravitate towards. So if a larger continuation was to form here, don't be too surprised. You'd have to pivot your bias and look very neutral on it and see this as a continuation to the upside. But this could probably correct into July for the larger continuation. So I'd be patient with that. But definitely it does look like there could be a potential for a short in there right now, and that's what I'm really looking for. Euro USD. So Euro USD, as we can see with the DXY as well, there's a lot of corrective subjective behavior around it, but that doesn't mean that we can't take advantage of potential entries on here. Even though we're kind of rejecting from this area here and we're creating this as a corrective squeeze, this looks more like a middle section where we could be getting something like that, and essentially something like this could happen. So I am looking at this to play it into that low to see then if we do get something like that where it becomes a 1 2 3 back into this trend line, and then we could sell, fair enough. But it's more of an intraday, more aggressive play here, where I will be looking for something like this, where we've created a floor, we've come back in, we've tapped into this area, we've pushed insurance entry, can get in pretty tight with stops, and then we'll just trade into the low where I've got about 8 to 1, which is pretty nice, and I'm happy with that. And then if we do push through further and we come to those lows over to the left over here, then we could be looking at about 15 to 1. But really and truly, a 10 to 1 is what I'm really looking to walk away with on this one. I will be extra patient and sharp with it, but it would be looking at see if we can tap into these areas, push, get an insurance entry, and go short from there. It could come in with a bit of volatility because we do have a bit of Euro news this week, so it doesn't have to come up like this. It could be impulsive. If it's impulsive, I'll be looking for more for push down for a continuation, but definitely we'll be looking at something like that. This could be refined a little bit more, to be honest. You could see a 15-minute opposed to a 1 hour, and then refined on the 5. But like I said, it's something that we'd have to evaluate closer to when we start approaching these areas. So simple, just set an alert, wait for price, let it do its thing, just check it in every day, and then morning and evening, and then you can basically take advantage of that. GU. So GU is a bit of a hedge play for me. Now I'll just invert this for a second, right? Because as we know with the DXY, we are in those areas where we could reverse. If we do push up higher and then we come in with impulsive behavior and we get deliberate price action down here, I could potentially be taking a short into the first low as a 5 to 1, and then if we do come in to fill this area here, it could turn into a 16 to 1 on that. So that's essentially what I'm looking at, with a bit of an extra stop loss there. Could go tighter, but I wouldn't want to choke it. I would want to give it a little bit extra room there. But yeah, really and truly, there's a phenomenal position in play here for us to take. So something to just bear in mind. And then I'll just zoom out for a second so you can just see that. So you can see on the daily as well, it's still in its corrective behavior right now, but we're coming into an area of interest where essentially within this area here, we could potentially see it pull back, and then we could get in for a first continuation flag to go in higher, and then it basically makes its way, fill this area, and then we'll evaluate it from there. But overall, when I just go to the weekly, what I can see here is if we look at it in terms of a sequence, we had a push up, we had the massive accumulation here, then we pushed up, and now we're just creating this to then maybe get one more move here. So I am looking to play that as the hedge play into the upside, but right now it does look fairly like it's going to continue lower. But I think with the near miss to these areas, we could be getting a clear message that actually in fact we're not, and we could be coming back up higher. So we'll have to wait and see how that one shapes up. EuroCAD actually looks really nice, similar to GBP CAD. I mean, look, we've basically done more than enough to kind of go. What I'm really looking at is to see if we can trade back into these lows here, and then if I go to the daily, we can see here that, okay, well, we had a push down, we corrected. This correction is much larger than that push down, so there's a level of neutral mindset there. But what I'm seeing is this being the strongest level of the magnitude here, and even that point just below it, can we still get a continuation pattern into that low, and what could we walk away with? There's a potential 5-to-1 on the board there, so there's potential for a good trade there. I think definitely going in with the risk entry is a lot more risky. If you wait for an insurance entry in here, it may not come. That's the only one thing you'd have to accept when you are taking it, but really and truly we'd have to wait and see. Who knows, I might even actually end up taking a 30 pip stop loss and walking away with a 3-to-1, but then you'd be playing the move to potentially break through this, and then if we did break through it and we continued in its current sequence to the downside to play this 90%, then what we could see is this turns into a lot of a large move, and if I did get in with the 15 to 20 pip stop loss, it could become a 10-to-1. So there's room for this to really develop. It does require a lot more patience because it's not going to move in one impulsive run. It's very unlikely. It's probably going to create a bunch of continuations here, so you'd have to kind of price that in with your management as well. But definitely coming into these areas, I might be a little bit more aggressive, walking away with a 3-to-1, and then maybe looking for a repositioning, but it depends what move you're playing. GBP CAD, now the reason why I think this one is a lot nicer is we have much more of a clear run to the downside, hence the reason why if we have EuroCAD equally there as well, we can also see that if GBP CAD's going to sell off, EuroCAD's most likely going to follow through with it. Now, in terms of a daily perspective, we can see that we've done more than enough. We've tapped into this area here. We've basically filled this. We've come back into the pattern. And then what we're seeing here is impulse, correction, continuation below all of this, where's basically my line in the sand. Want to just see how price does here. If it pushes up, pushes back in, that's perfectly fine. It's very much likely to do something like that. So a 4-hour confirmation would be perfect in these areas. And then basically looking at it on the one, I would just kind of be careful with a risk entry. I've marked it on here because that is basically the area of interest for the entry, but definitely if we were to push much higher and then come in, I would look for that insurance entry within here, and most likely I'd be able to probably get in with a 10 pip stop loss, which then also makes the trade a lot better. So definitely going to be waiting for that one patiently to see how it shapes up, but definitely EuroCAD and GBP CAD is one to definitely keep an eye on because we are in a clear run of momentum, and in terms of sequence it's looking pretty nice right now. Also, just to add to that, if it did become a little bit larger and more complex, I wouldn't really be put off by the trade. I would just be a little bit more patient, and then that one could shape up towards the following week. But I'm anticipating this one to shape up by Thursday. If we get anything sooner, it's going to be a little bit more tight, so I need a bit more weight on this. So hence the reason why it does need a bit more time. Euro Aussie, now I'm looking for a reversal play on this, and I'm just going to invert the chart quickly. What we can see over here is that we've correctively come back in and tested this area, and we've broken above. Now the fact of the matter is we're still above this ray line. I am waiting for price to deliberately push back in with impulse, basically retracing at least 50% of this overall bullish move here, which you can see on the weekly. And the nice thing about it is that if you look how we've closed above. So the nice thing is now if we can close below on the weekly, it gives us a really nice confirmation that we're coming back in. But more interestingly, we're going to look to get positioned within that week. So if we look at it on the 4, I don't think we're going to be seeing something so large, but if it happens, it happens. I just want to see a solid push back in. If we get continuation here on the 1 hour, I would evaluate it as a higher risk play, but it would still make sense because we're trading below the low. So continuations below this low is more preferred. Right now we just need to see a follow through. This can still correct because it is in a bit of a squeeze right now. It can still correct, and then eventually when it does push through, we'll be alerted and it will let us know. So the most sensible thing right now would be to set an alert to just let us know that price has basically tapped into that ray line, and then we want to evaluate how we've broken through it, and then look for deliberate continuation on the daily. We'd be able to see something like that. And in terms of a risk reward into this low here, we could be looking at a 10 to 1, and then fourth goes on and on. So there's definitely a lot of potential across the board on this pair as well. And then going into GA is a little bit more for hedge play on this one as well. So even though we're looking for the shorts on on EA, we're looking for the shorts on for the longs on GA. So we're looking for the shorts on EA, the longs on GA. Yeah, that's right. So because GA hasn't technically tapped into this area, which it doesn't necessarily have to, it can still come down before it comes back up. I still want to be a little bit more patient with it. So what I can see here is we've tapped into this area of liquidity and we've pushed up. So we are basically in a run of momentum to the downside because it is still inverted. And essentially, I just want to see some structure develop here. So when I'm looking at it like this, I just want to see that structure has been developed, and then across the board while this is developing, probably EA might be squeezing. So we need to be a bit more careful when there's something like this shapes up. Then I will prefer to look for the shorts on GA and avoid a long on EA. So GA over EA, but EA is positioned really well. GA could just be more of a trap because, as we know with GA, it can get very messy and very difficult. So I do naturally prefer entries on EA, but if GA shapes up with clear deliberate price action, then I'd definitely be looking for something like that. Now, it's a tricky one because in terms of structure, I'd look for something a little bit more perfect. So really and truly, if we can get in here and it does squeeze, gets into these areas, then we can basically evaluate it as well. But more than likely, I'm looking to take a trade into those lows. So even if we got something like this, that would still be of interest. It's just there's so much mess to the left. I would really want to see something kind of just tap into those areas before I even take advantage of it. So it's one of those ones where GA is going to be a little bit more difficult to take, and it usually is, but we'll have to wait and see how that shapes up. So give that one a bit more time, but if we did get something a little bit more deliberate and clear and something we could read through, fair enough. It just has a subjective first touch to this forecast, so it's not my go-to setup, but if it did shape up and it did do something like this, I would understand it and be able to take advantage of it. It's like I said, it's one of those ones where it could be very difficult to decipher, and because of that, you might end up taking a quick loss on it. So I would be careful with GA as a one to take in. Going into Euro Swiss, so I don't usually take a lot of Swiss pairs, I'll be honest with you. Sometimes I do opt in to take them, and Aussie Swiss has performed quite well over the course of last week, but we now have to really just wait and see. Now we are in a run of momentum, so it does make sense to see something a little bit larger, but this can still continuously move in its momentum run. Now, as we can see over here to the left, that we had price action just like this. What I am looking to see is that if we get something similar, so if I go into the 4 hour to just get a little bit closer with this, I'd like to see a floor created of two bottoms. We already have two tops, and then if we can come back in, take people out, and then push back in with an insurance entry, I would look to get positioned on that. Even with around about 10 pips, I could still get positioned in pretty tight. I've got about 7 to 1 on the low here, and then if we're playing the total run, it turns into quite a big trade. So you can see the whole context of this. Overall, it looks pretty nice. We just have to really see it. The only thing is, we don't tend to get the insurance entry a lot of the time. So it's one of those ones where if we don't get it, we don't get it, and it is what it is. But there's definitely still the room for the 1 hour risk entry. I just personally would prefer to stay out of it because I feel like it could just be quite a bit of a trap. But Definitely, I'm going to wait for that insurance entry and see how that shapes up. May not be this large. I've just put it there for demonstration purposes, but we'll have to wait and see on that. Euro GBP, likewise. Euro GBP is quite nice because we basically have a gap to fill here. And if I look at it on the daily quickly, we can see here that we've basically broken all of this low. So we are in the area of the mass psychology where, are we going to continue to go short, or are we going to pull back in now and move back to the upside because of the corrective behavior? But I think in terms of a run, if we look at it from here to here, and then if we look at it from the top, we've basically completed the move. But then if we look at it from the break, we still have some run into these lows, and that's basically what I'm looking at. Because if we can take a low into that low, to the bottom of this pattern, I've got a 6.5, and then I've got about 10% to that low. If I go into the 4, it's a little bit more of a difficult one to decipher, but I'm basically playing the gap fill, and we fill the gap, we push away, we create an insurance entry, and we look for the short. It's not the easiest one to decipher, I'll be honest with you, and it's not one that I would expect a lot of people to take advantage of, but a lot of the time we do see price action like this. So if something like this was to happen, I would fully understand it and be able to position myself and understand the risks. But we just have to understand that if this is going to come in like this and go up, we're still technically a part of a squeeze, and this can just still squeeze before we do go short. So something like this, if it did come down and then come up, would be more preferred, to be honest. And then you could basically get positioned on that, and that would be a little bit nicer. But like I said, we don't always get what we want, so we just have to kind of forecast what's most relevant right now. But if we do kind of drop off before we come back up, then I'll amend that forecast in that way. New Zealand CAD I am looking for the long. So I know with GBP CAD we were looking for the shorts, and likewise with Euro CAD we're looking for the shorts. New Zealand CAD is my hedge play on it. So what I am going to be looking at, if I see the daily, we can see that we had this high area here which we missed, which we don't necessarily have to tap into, because when we do look left over here, what have we done? Well, we've basically broken above and pushed back in, and then also we've taken out the liquidity from this little hook point just below this area. So there is more than enough to negate the sells, so I wouldn't put the sells off just yet. But what I will see is that even though we've pushed away, I just want to see if this is where the floor is, and we tap into this, we push back up and get an insurance entry to go long. This is higher risk because of where it's positioned, but if we do get an entry around about these areas or these areas to go long, it's basically a no-brainer. It will be a lot less riskier because of where we've come from, and more than likely if we tapped into somewhere here and when, that would make more sense. But right now I can see that we are kind of just squeezing into that low, which is interesting, and I'm just going to basically be waiting to see how this plays, and then basically take the insurance entry to go long. And then to this area here, which is your first inflection point, you've got about a 5-to-1, and then to that high you've got about 13, and then 15, and then onwards. So definitely one to definitely pay attention to, because I feel like it's a week of neutrality, really and truly, and not getting caught up in a lot of intraday positions in here. You basically just want to see something deliberate. In terms of the continuation short, if we did get something like this where we tapped in here and then we came in here, I wouldn't take something like that, because even though you have a 1, 2, 3, it's subjective there. We're kind of coming off this. I just feel like GC and EC would shape up a lot better. So something like this for the hedge play for sure. Don't really care how far it pushes down before it comes back up, as long as we can get that clear, strong full body price action to the upside. And if you invert this, it looks a little bit nicer. You can see it like that, where we've got some liquidity sitting in this area. It's pushed through, tapped into all the liquidity, maybe even tapped into this little hook point, doesn't really matter. But then we've had the solid push back in and then continuation, and then we're looking to play this run here, and that's basically how I'm looking at it. Now I've got 3 extra pairs, which are usually tend to be a compilation of indices, commodities, agricultural, and so forth. So what we're seeing over here is with the DAX, it's basically correctively squeezing, and I'm not going to get caught in on a short, because if you look at it on the 4-hour, it does basically kind of look like it's basically ready to go, like in a continuation, push, continuation, and go. But I think the fact of the matter is, because we didn't go from this area here where we broke above, impulsively pushed back in, and we didn't commit. I think for that reason alone, we're basically going to see this correctively come back in, maybe tap into this area of liquidity, push insurance entry and go, and there's a clear 10 to 1 into this low. And then if we do continue, which I'm anticipating, then we could basically turn into a pretty decent position. So that's what I'm looking for on the Germany 40. Then we've got the US 30. US 30 as well is going in line with the US 500 forecast, where we're looking at large continuations to the upside. As this basically correctively squeezes sideways, we may see something like this, where we come in, we tap into the high, perhaps maybe we even break a little bit higher, and then we impulsively come back in, retest these lows, push up, small insurance entry whilst this corrects, maybe a bit higher up, who knows, and then we can get in positioning it for the continuation long. Now the great thing about this is, because of where it's positioned, a lot of people will be anticipating shorts, and I am also neutral for shorts, but I wouldn't be put off by the longs, because we can see that in terms of a long position, if we were to get long to the next point here, we can see that we have roughly around about 10 to 1, and then onwards we have about 20 to 1. So we're looking at a pretty decent positioning on these as well across the board. So I think don't write these off because you're looking for the short. Stay neutral with it, because if this did for any reason come back up and then sell off and then it's down here and creates continuation, I wouldn't be put off by a short here to play this range. It's just one that I would definitely keep in mind. And I'll just quickly jump over to the US 100 where we can see this. So we can see that we're overextended, and I just wanted to point this out now. Even though we have this strong push and now it's accumulating a small range here, don't get sucked into a trade like this straight away. I feel like this could be more than a trap, because it's basically looking like it's creating a range to continue lower, and it could definitely be true. But at the same time, when you're looking at the S&P 500 and the US 30, they don't really look like they're ready to go bearish just yet. So if you get caught into something like this, just be very, very careful. And then going into last but not the least, this is actually a phenomenal one. It's WTI co-USD, which is US oil. Right now what we're seeing here on the daily is, well, we've correctively pushed. So we had our correction over here. Just trying to figure out why that ray line was there. We basically, on the weekly, we can see that we came back up. We rejected from these areas, and now it makes sense to see larger continuation in this area. If we look at it on the daily, we basically pushed from there to there. Now, one interesting observation is we've basically tapped into the 50% area, so it makes sense for this to be a larger continuation and for it to retrace back into these areas, right? Now, one thing that I do like is that we had liquidity sitting in this area, we've correctively pushed, and now we're in a bit of accumulation here. Could it go long? Could it go short? We have to stay quite neutral with it. It could go long, yes, absolutely, and I don't think taking a long is necessarily a bad thing, but I think in terms of looking for what could actually happen, well, if we look at this closely, we did come in with a bit of a squeeze here where we did this, and then we've actually broken through that now. But what I would like to see is that we clear this low, but more importantly, if we can get continuation below this area to then trade into this area. So if I can get positioned in here with, call it 20, 15 pips into this low, I can get a 5 to 1 with 20 pips, and then obviously if I can go tighter, I can get, you know, a little bit more. But more than likely, I'll be looking for that. On Friday, because of the hour session, this was looking interesting over here. But I'll be honest with you, because of the time of day, you would want to avoid that really, because it was coming to market close. On Friday, you pay triple swaps as well, things like that. So what I want to really see is deliberate price action, that we are getting a clear message from the market that we're ready to commit, and then we sell, we drop into these areas, get clear deliberate price action, and then what happens is, do we open up the floodgates? Because then if this is going to go short again, we have pretty decent off a run. If we break through that 4%, this could turn into 15 and then ultimately turn into a pretty decent position. But you'd have to manage through a lot of the corrections within here, perhaps the scaling opportunities and whatnot as well. But most likely you wouldn't be holding for the full 40%. If you are, well done. You know, there's a lot of patience involved on that, but you can see that the thought process behind this. For the long position, it still looks pretty good, because if you go to the weekly, you can also see that this is in a corrective sequence. So if this was to come back up into these areas, it would make sense, but I just don't think it's going to be coming up in one move. I think it will be quite messy and quite corrective. So overall, that basically summarizes what I've got on for the week. I think the markets are looking really, really nice. I think there's a lot of opportunity across the board. There was a few pairs that I did filter out, but as I mentioned, I may filter something in during the week. If I do, I'll probably just kind of mention it. Now, I know a lot of people as well, just kind of mention, is looking at Swiss pairs. I'll be honest with you, you want to really be patient with a lot of these, because even though they've broken their sort of value areas, some of them are still stretching for the higher value areas. And usually when I get involved on these yen pairs, I want them all to be piled up together. So definitely be patient with it. Definitely, yeah, be very patient. So thanks for watching, guys, and I will catch you guys in the next video.